we're going to talk about how to save taxes when you're trading in cryptocurrency. So maybe you're a cryptocurrency trader, maybe you're day trading, maybe you're holding cryptocurrencies as a long-term investment, maybe you're mining cryptocurrencies, or maybe you don't even know what cryptocurrencies are. So we'll start by talking about the difference between a fiat currency and a cryptocurrency, differentiate between the two because the IRS does. Fiat currencies, even a foreign fiat currency, is taxed differently from a cryptocurrency. So we'll start with a fiat currency. That would be what you're used to, your US dollar, your British pound, any of those government-backed currencies. So this month, for example, July 2023, the Fed has begun its rollout of the Fed Now, and that everybody's asking, what is Fed Now and how does that affect my business? The Fed Now, you can think of it like Zelle, which is issued by banks. So that's a bank-to-bank transfer of funds. It's instantaneous. It doesn't even have to be, I could transfer funds to an individual. I could transfer funds to a business. They just need to be on that same platform, Zelle, or maybe Venmo. Venmo is not controlled by banks, but that's a private exchange. Zelle would be like a bank-to-bank exchange. And Fed Now would be that's controlled not by individual banks, but by the Federal Reserve. The interesting thing about Fed Now is if my business wants to pay your business for services that you've rendered, and I transfer those funds at 2 o'clock, you're going to get those funds at 2 o'clock. So the velocity of money is going to increase significantly through this program. It's rolling out in July, and it'll be interesting to see the impact that it has on supply chains and inflation. I think we'll see significant impact from the rollout of this new Fed Now. Fed Now, because it's dollar for dollar, instant dollar to instant dollar, there's never a gain or loss on the value of the currency because it's US dollar to US dollar. But a cryptocurrency, there can be a significant gain. I may buy a cryptocurrency for $20,000 on Monday, and it may be worth $10,000 on Tuesday. So there's a $10,000 difference in that gain. And it's important to understand how that gain is taxed so that you can keep really good records and control the timing and the nature of your gains on the cryptocurrencies. Cryptocurrency is treated as property by the IRS. So you can think of buying and selling cryptocurrency like you buy and sell stocks or you buy and sell gold. It's property. So depending on the length of time that you hold that property, it'll be a short-term capital gain if it's held less than a year, or a long-term capital gain if it's held more than a year. So if I purchased a Bitcoin at $20,000, I held it for 1 year and 1 day, and I sold it for $30,000. That's a long-term capital gain, and it's taxed at the long-term capital gains tax rate. That's a favorable tax rate, and that would be a good thing. If I hold it for less than a year, it's taxed as ordinary income, and that's going to be a higher tax rate. So you can see that depending on the timing and the length of time that you hold these stocks, you can control the capital gain tax rate that you pay. So next time we're going to talk about how to control the timing, whether you want to use FIFO or LIFO or specific identification when you're buying and selling your cryptocurrencies. So we'll also look at if you're mining cryptocurrencies, because that's a different taxation on the mining of cryptocurrencies. So next time we'll talk about controlling the amount of gain that you have to recognize by controlling which stocks you sell first, so that you can have the highest basis and the lowest capital gain. And then we'll also look at the mining of cryptocurrencies, and that's taxed very differently. So be sure to catch the next video where we talk about the basis for cryptocurrencies, calculating the best basis for your cryptocurrencies, and also we'll talk about the mining of cryptocurrencies and how that is taxed.